This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Businessweek Daily on this Tuesday, August 19th, 2025. I'm Tim Stenovec, along with Bloomberg News cross-asset reporter Emily Graffeo, who is in for Carol Massar once again as Carol is on her, I think I can say, annual retreat. I'm not going to give up too much personal information, but viewers of this program know that she likes to take a little time in August and September to hit the water. Emily, a little bit of a different picture in today's markets than yesterday's, at least when it comes to the equity trade, with the S&P 500 and the NASDAQ taking a little bit of a hit.
That's right. And we also have bond yields moving lower. Additionally, Nvidia, Microsoft, Broadcom, Meta, and Amazon all dragging the S&P 500 lower, but we're still within hovering distance of all-time highs on the S&P 500, Tim.
We're going to have more on the trade in just a second. Charlie Pellet is standing by. As Emily mentioned, bond yields lower ahead of Jay Powell's speech in Jackson Hole a little later this week. Michael McKee is live in Jackson, Wyoming. He's going to be joining us in just a minute.
Also, stand clear of the closing doors. It feels weird to be the one saying that, but we're going to be joined by the new CFO of the Metropolitan Transit Authority. And we go nuclear with the CEO of NANO Nuclear Energy. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. Now to the man who actually says stand clear of the closing doors, none other than Charlie Pellet.
Thank you very much. Here's what's going on. Let's stand clear of the sell-off right now because we have got the Dow, the S&P, NASDAQ all very much in the red. We are off session lows, but still a loss for the Dow, the S&P, and NASDAQ. Right now, the S&P is down 36, drop there of 0.6%. The Dow lower by 19. Little change there, down under 0.1%, while NASDAQ, the composite index, down 279, a drop there of 1.3%. The 10-year currently yielding 4.29%, with the 2-year 3.74%. Spot gold is down $14 the ounce, down 0.4%. And West Texas Intermediate crude oil down 1.8%, $62.28 a barrel. Bitcoin is now down 2.6%, $113,450 on Bitcoin. A slide in the world's largest tech companies weighing on stocks. Big box retailers getting a boost from Home Depot's numbers. Home Depot, by the way, up by 2.9%. Meta platform shares lower now by 1.9%. Meta is splitting its newly formed AI group into 4 distinct teams and reassigning many of the company's existing AI employees, an attempt to better capitalize on billions of dollars worth of recently acquired talent. And Commerce Secretary Howard Lutnick is confirming discussions between the U.S. and Intel for the government to take a stake in the chipmaker. Intel up by 8.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. We start with the latest on the effort to bring an end to Russia's invasion of Ukraine. It's certainly been a whirlwind stretch as President Donald Trump pushes to end the war, now in its 4th year to an end. He held a summit in Alaska with President Putin last week. Talks, of course, at the White House with Volodymyr Zelenskiy and European allies yesterday. Jen Dlouhy is Bloomberg News senior reporter. She joins us from the White House. Jen, I want to start with the latest in this idea of a bilateral summit ahead of a trilateral summit. We're learning additional details on where that could be held. Are we getting any details on a timeline here?
Yeah, also for the bilateral summit, which, let me just take you back for a moment. The president had originally discussed having a trilateral summit be the outcome of yesterday's meeting with the European leaders. In the end, he said that the actual plan now is to proceed first with a bilateral summit between Zelensky and Putin. The The timing on that is a little bit uncertain. It's not quite clear when that will happen. Germany's chancellor indicated that it could happen within 2 weeks, and the White House press secretary just indicated to reporters that Trump is scoffed at the idea of waiting 4 weeks for a meeting. So we've got at least some indication that folks want to get this done in the next couple of weeks. There is some reporting out from Politico today that Hungary and Budapest specifically has been scouted as a possible location for a trilateral summit, one that Trump would later join. But no details have been confirmed from the White House at this point. And right now, there's still just an effort to get these talks to occur. One important note is that a Russian aide to Putin last night said that Trump and Putin had only discussed the very idea of a bilateral discussion. The White House press secretary told reporters today that, in fact, Putin had promised that direct meeting.
Yeah, Jennifer, maybe expand on that point. Give us some of the context here about just the reality of the relationship between Zelensky and Putin and whether a bilateral meeting is actually realistic, that we would see that, just given their relationship.
It would, of course, be remarkable. But then again, yesterday's meeting at the White House of all these European leaders who flew to D.C. On barely a moment's notice was also remarkable. What's notable here is that Trump has repeatedly said some of these details are so sensitive, they really need to be hammered out by Ukraine and Russia, that they really can't be dealt with interlopers. And Zelensky, certainly seemed supportive of this yesterday. The talks are ongoing between U.S. and other and Russia and Ukrainian officials to get these going, according to the White House press secretary today. So at this point, it does look like this is the next step. The bigger question probably hanging over this, or one of the bigger questions, is, whether the fighting in Ukraine will continue and whether the European leaders' efforts yesterday to encourage Trump to once again embrace a truce that he says is not necessary to broker peace, to get that back on the table.
Hey, Jenna, I wanted to shift gears a little bit and talk about security guarantees here and what exactly security guarantees would look like in the context of Russia's invasion of Ukraine, especially in an environment where obviously the U.S. over the last 3.5 years has not sent troops to the area. Would it be a UN peacekeeping force? Would it be a NATO peacekeeping force? What would it look like?
Right. I mean, security guarantees were really the biggest topic of discussion. They loomed large in yesterday's talks. Ukraine and European allies are wanting to ensure that any peace deal now doesn't lead to a Russian incursion in the future. And Trump has made clear that, these security guarantees are a possibility in lieu of Ukraine joining NATO. He reiterated this morning that Ukraine joining NATO is not tenable from Russia's perspective, but the U.S. has discussed these NATO-like security guarantees. So what could that look like? Well, Trump is saying it's not going to be American boots on the ground, and he's been very clear about that. It's been reiterated here at the White House today. But the president has left open the possibility of American pilots and aircraft being involved in providing some air support in the region. The president has said, if there are military forces on the ground, that's European countries that would supply those ground troops. And of course, we also have President Trump very proud of having brokered kind of a deal for America to sell weapons that would be financed by or purchased by European allies to be used in this conflict. That's the kind of arrangement that could also continue. Is there appetite for European leaders to send their citizens to that area of the continent? Well, Trump certainly made clear yesterday that he sees any kind of on the ground presence coming from Europe. And he's drawn this line in the sand about American support. What we heard from European leaders was this united show of force, in wanting to end this conflict. And as Emmanuel Macron emphasized, we want peace now. We are committed.
What do we watch for next? What are you going to be monitoring for next as we kind of await this potential bilateral meeting?
The biggest question, one of the biggest questions right now is does this bilateral happen? When does it happen? How quickly does it come together? I mentioned the commentary from Russia last night that suggested this might not be as baked a plan as certainly Trump's Truth Social post last night had indicated. That would, that has created some uncertainty over the next steps in the process here. So really seeing any indication that bilateral summit is going forward and going forward quickly, I think is the biggest thing we're watching for. We are looking, of course, for the evolution of any possible financial deals tied to these discussions and tied to security guarantees. And of course, any discussion around the form of these security guarantees, very much still after yesterday, a topic of lively ongoing discussion between Russia, between the U.S., between Ukraine and European allies.
There was some reporting yesterday that indicated the president left the meeting to call Vladimir Putin of Russia. Do we have any reporting now about the content of that call, the duration, anything like that?
We know that this, again, this extraordinary meeting paused essentially in the East Room so that, and had continued, of course, in the Oval Office, paused so Trump could do this direct call to Putin and essentially provide a readout of what was being discussed. The White House indicates that was something European leaders supported. We know that, Trump had promised he was going to do this call with Putin afterward and believes that this kind of interaction is facilitating a deal. But again, there's some variance on exactly what was agreed to with regard to the next steps in terms of that bilateral meeting.
Jen Dlouhy, Bloomberg News senior reporter over there at the White House. Jen, thanks so much. Check out her reporting, the entire team's reporting on the Bloomberg terminal and at Bloomberg.com. Well, from Washington, D.C. to Jackson, Wyoming, it's where we find Michael McKee, Bloomberg News international economics and policy correspondent for TV and radio. Earlier today, he spoke with U.S. Federal Reserve Governor Michelle Bowman. She's one of the folks reportedly under consideration to be the next Fed chair. And yes, he asked her if she's interested in the job.
Well, right now I'm committed to doing the job that I have, and we've really hit the ground running with our request for information on check fraud and other payments fraud, with the SLR proposal that we just put out, the LFI rating system. We're taking a really hard look at our supervisory components and across our reserve banks as well as at the board to ensure that we're focused on material financial risk. So I have a big agenda. We're moving through it quickly. Obviously, we need to get the capital proposals completed in the near future. But, I'm really focused on the job that I'm doing, and I'm grateful to the president for appointing me and the Senate for confirming me to this role.
Michelle Bowman, Federal Reserve Governor, earlier today from Jackson, Wyoming, alongside Michael McKee, Bloomberg News international economics and policy correspondent, who joins us right now. Mike, Mickey Bowman was pretty quick to answer your question. I'm focused on the job at hand, essentially saying that twice. Where is she sort of in the race? I don't want to call it a race, but in the group of names who are being considered to be the next Fed chair?
Well, she wouldn't be considered among the top candidates or favorites, not because of her skills, but because the president seems to have already fixated on a small group of people. It's Scott Bessent, the Treasury Secretary, who said today he's going to start interviewing people around September 1st for the job. And he's the one who's talking about this expanded list that has shown up in a lot of reporting. Now, you heard from Michelle Bowman what you would expect to hear when someone is put on a list of potential candidates for a job. They don't want to jinx it or talk about it in any way publicly. So it's hard to know whether she's a serious candidate in her mind or not. But I suspect that we're still looking at one of the Kevins or a Chris Waller kind of person, although it is Donald Trump, so anything can happen.
All right. Well, in the meantime, she does have her current role, and she told you that she has a big agenda, which includes overhauling big bank capital rules. Tell us about the discussion you guys had there.
Well, of course, this was all part of the Basel III international agreement on banking, and the United States is one of the few countries that hasn't yet ratified it. The Biden administration put out a 1,000-page proposal to make the rules stricter in the U.S. than in the rest of the world. The Trump administration has now junked that and are rewriting the rules to make them a little lighter on the banks. The question is, when do they get them out? The hope is relatively soon, because they have to go through a comment period and then go back to the Fed for reconsideration before they can take effect.
Okay, so let's broaden the conversation a little bit, Mike. By the way, you look really relaxed out there in Jackson.
No cowboy hat, though.
Yeah.
You think I'm coming back?
Yeah, you're not coming back for a while. I know that. But that's also because you have a lot to do out there. And partly that is hearing from Fed Chair Jay Powell later this week. The conversation that we've had up to now is really focused on the potential for a September rate cut and messaging around that. What's the reporting you can bring us around that narrative?
Well, the feeling is that Powell will sort of dance around the idea of a rate cut and say that the Fed is looking at the possibility along with the possibility of doing nothing, and it's going to depend on the data, what we get in terms of the employment report and the CPI report that'll both be out before the next Fed meeting. The employment report we had last time was disappointing and suggested maybe the economy is weakening a little bit, so you'd cut rates. But then in the last week, we got some CPI and PPI numbers that suggested we're getting a little of inflation out of the tariffs, and that might pick up as well, which would mean you would want to leave rates unchanged. So they're going to wait till the last minute, see how much data they get. And I imagine that Powell is going to disappoint investors who are looking for him to ratify the idea of a rate cut, which he did last year. He said at this meeting that it was time to cut rates, and they did in September, but maybe not this time.
What else do you expect for his speech? I remember a couple of years ago, a lot of traders were kind of parsing through the length of his speech. He had a very short speech, I think in 2022. Are there any kind of, reading the tea leaves that traders are going to be looking for Powell's next speech?
I don't think so, except for the idea of the rate cut. But it is likely he is going to at least outline what the Fed's new monetary policy framework is, how they look at the economy and determine what they're going to do going forward. Remember, the last one he announced at Jackson Hole in 2020, just before the pandemic was at its worst. And he said that unemployment at that point was continuing to fall, inflation was very low, and they would essentially let the economy run hot for a while to try to get a maximum benefit out of the falling unemployment rate. That didn't work out very well with the inflation that came after COVID. So now every 5 years they relook at what their framework is, and now they're expected to drop some of that language and maybe go back to what we had before, which was essentially we'll do what we think is right at the time.
Mike, before we let you go, just give us an idea of what the vibes are like there. Partly, you're there for a couple different reasons. Of course, the Fed chair and his speech on Friday and all the Federal Reserve members who are there, but also this blockchain symposium that is happening. Salt and Kraken are hosting this, and you've been talking to people, you've been reporting on the ground there. What's the vibe like? What are the attitudes like? Is it different from previous years?
Well, it's my first time here, and this is only the second Wyoming blockchain conference, so I don't know how different it is, but it does have a happy vibe to it as people feel the Trump administration is very supportive of crypto, and that's a change from the way the Washington had looked at the asset before. And so they're kind of interested in what the possibilities are going forward, which is one reason they had McKee Bowman come in and speak to them. And tomorrow they'll have Chris Waller, another Fed governor, talking to them about the future of crypto. The question kind of is, does the government get into the business with a government sort of digital dollar like the Chinese have done, or do they leave it to private sector? The president has suggested the private sector would be best, and he has suggested a light touch of regulation. So people here are pretty upbeat.
Michael McKee, Bloomberg News international economics and policy correspondent, live from Jackson, Wyoming. I know he's working a lot, but hopefully also getting some time to maybe do a little hiking or some fly fishing. Hey, coming up next on Bloomberg Businessweek Daily, we are going to be joined by the CFO of the MTA. She's the finance boss of the subways, the buses, and commuter rails that power New York City and the region. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at just about the lows of the day right now. For the Dow, the S&P and NASDAQ stocks selling off. A slide in the world's largest tech companies weighing on markets. Big box retailers, though, getting a boost from Home Depot's numbers this morning. Here's where we stand. The S&P 500 index right now down 43 at 6406. That is a drop of 0.7%. The Dow is down 79, down 0.2%. The NASDAQ Composite Index, low of the day, down 303 right now, down 1.4%. Our Mag 7 Index down 1.6%. The 10-year yield 4.29%, with the 2-year currently yielding 3.74%. Spot gold right now down 0.4%, 33.19 the ounce. West Texas Intermediate crude down 1.8%, 62.27 for a barrel of WTI. And Bitcoin now lower by 2.7%, 113,364 on Bitcoin. Nexstar Media Group has agreed to buy the TV station operator Tegna for $3.5 billion in a cash deal that stands to dramatically expand Nexstar's reach to 80% of American households and tests the Trump administration's appetite for consolidation. Nexstar is down 1.4%. Tegna right now higher by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. This one's special for you because we're talking about New York City subway. The MTA runs New York City subways, buses, and commuter trains that 6 million people rely on each weekday. And on Monday, board members approved close to a $2 billion contract to expand the 2nd Avenue subway line into East Harlem. Jay Patel is the CFO of the MTA. She's charged with quite the task, which I think is fair to say many would find unenviable, charting a sustainable path through one of the agency's most financially trying periods in its 6-decade history. She joins us here in the Bloomberg Businessweek studio. Jay, welcome. How are you?
I'm good. How are you, Tim? Thank you for having me.
Yeah, thanks so much for joining us. I want to start with the numbers and just ridership here. Weekday subway ridership is still 25% below pre-COVID levels. In your modeling, does that ever come back to where it was?
We have a financial plan that's a 5-year period, and originally we were projecting that we would see our subway ridership up to 90%, but a couple of years ago we revised that because we weren't seeing that, but we're hopeful we see an 80% by 2029 ridership recovery for subways. But on the railroads, we're seeing that recovery even higher today. We see 85% ridership recovery on our railroads, which is amazing, something that we thought was going to be slower, our railroad customers, than our subway customers originally coming out of pre-pandemic.
So is there a way to tap into that growth financially, perhaps with higher prices for those commuters rather than here in the city for subway and bus riders?
So, what we have is very small, predictable fare increases that help balance the financial plan. And so we don't want to burden one rider over another. It's really about distance-based and commuters. And so we keep that equitable. You know that we do a 2% fare increase every other year, and that keeps our financial plan in balance.
How do you plan to get that number? I think you said 80% ridership. How do you bring people back into the subways?
We bring riders back by providing reliable on-time performance, right? Our service matters to customers, and delivering the service that we promise and schedule is something that we strive for, but also safety. Our customers need to feel safe, and our customers feel that, right? We've had the lowest safety numbers or crime numbers in July, and so our customers are telling us that by taking the subway, but also our customer surveys, right, tell us that customers are satisfied with the service that we're providing.
The MTA faces a combined $1.1 billion deficit over 3 years starting in 2027. It already owes close to $50 billion. It needs to spend $68 billion more for vital improvements. There's some federal aid that's up in the air. The Trump administration is trying to roll back congestion pricing. What's the backup plan if the aid evaporates and the president is successful in rolling back congestion pricing?
Tim, I would be remiss if I didn't mention that back in 2023, we were the first transit agency to solve our fiscal cliff. Thanks to Governor Hochul, Chair Lieber, and the legislature, we were able to come out of a deficit unlike any other transit agency today. You've heard SEPTA is facing deep cuts, Chicago, but we were the first to say we need state, federal, and local aid, and we got our state federal funding for us. We also, as the MTA, contributing to our solving our deficit, right? The MTA contributes $500 million to its operating efficiencies. And those deficits that we have in 27 and 28 and 29 are very small compared to our operating budget. And we are committed to doing our part in saving money to help ensure that we can balance our budget in the out years.
We were talking a little bit about the base fares of subways increasing regularly. I'm wondering if is there a set area within the MTA that revenue goes toward? Because the base fare for a subway in New York City, it's expected to increase to $3 in January.
Correct. So our fares help our operating budget, right? So 70% of MTA's cost are labor and fringe. And so that pays for 70,000 employees. And then the small fraction is for the non-labor contracts. So every fare contributes to operating cost on our side.
Let's talk about fares and fare evasion. Usually when we talk fare evasion, I think of people jumping over subway turnstiles. And I know there have been some mitigation efforts in place, but I took the bus to LaGuardia on Thursday. It was a great experience, but when I got on the SBS in Queens, it was like an articulated bus, so it was a long one. I got on in the back, and out of like more than half a dozen people, I think I was the only one who paid. And I was thinking to myself, I didn't know it was optional to pay to get on the bus. What are the numbers there?
So it's not optional, right, to pay the fare. We are encouraging every customer to pay their fair share to
But there's no enforcement on the bus.
So there's a couple of things that we're doing for fare evasion, and our chair has been tackling this first when he became chair. So on the subways, you've heard of us talking about we're doing fins, sleeves, gate guards, enforcing the exit gate, which is the fare evasion highway. And so we've made great strides on the subways. We've reduced fare evasion in over a year by 30%. We've dropped that rate from a high of 14% to 9.8%. So we know those efforts are working. On the buses, it's a little bit more difficult, but we're also working there. We've decreased fare evasion on our buses as well in the last year from 50% to 44% because of all the tactics the president of New York City Transit is employing. We have Eagle teams that are on different bus routes to make sure that they are enforcing the pay your fare, right? Our bus operators do their due diligence, but really our Eagle teams are enforcement out there riding different routes and making sure customers pay their fare, or they're getting a summons, or they're getting off the bus. And that's how we're working towards that.
How does that work? Because I heard of a friend who was on a bus and someone had come around and scanned their phone to see if they had paid the fare. Is that how it works? Explain to us.
So right now, what we are doing is if you're boarding the bus, you have to pay because there's two different ways you can pay, right? Today is the Metro card and the Omni. And when we go to full Omni next year, there's going to be proof of payment. And so what you can do is European style proof of payment for customers is you can tap their phones or credit cards, the method of payment to see if they paid their fare. And if they didn't pay their fare, that's something that we'll work with on a summons, or, you need to pay your fare for our customer. And so that's something that's coming. We're really excited about that for Omni and proof of payment. But right now there's two different methods. And so we're working on different ways to combat fare evasion. I
want to talk a little bit about proposals from mayoral candidates. Zoran Mamdani, for example, his proposal to make all New York City buses free. What do you think of that? And does it create a sort of a two-tiered mass transit system where people who ride buses don't pay for it, but then people who ride the subway do, and then kind of offset people not necessarily taking the right mode of transit for their destination?
So we've heard the mayoral candidates' proposal for fare-free buses. What I'd like to emphasize again is fare box revenue is important to the operations of the MTA. It's 26% of our revenue. And buses is about $1 billion in the out years of revenue for the MTA bus. for the MTA, excuse me, and that's important to us. And so we want to make sure revenues equal service, and that is something that's a hypothetical right now, but we rely on fare box revenue.
So you said $1 billion in revenue is what it brings in. Mamdani estimates that's about $750 million annually to make buses free. Is that an accurate assessment on his part?
I think there's pieces that he's looking at just the New York City transit bus fare. We have MTA bus that we also run that the city contributes to, and that is also fare box revenue for buses.
So what would taking away that revenue from the MTA do to the authority's finances? Or would it just be, I mean, look, again, it's a proposal. You said it's something that, is not a plan yet.
Yes.
But to be fair, he is by far the favored candidate. And there are a lot of questions about what power he has to actually follow through with a campaign promise such as this. But this is certainly a central part of his campaign. So you got to be looking at it closely.
We are looking at it. But one thing that I would like to emphasize, right now in New York City, fares are affordable. We make transit and buses the most affordable at $2.90. And it's affordable with fair fares, reduced fare for our customers. But, it is something that we will look into as the mayoral candidate has proposed.
What about mitigating climate issues that affect particularly the subway stations? You go online, you see videos of flooding in stations. Or maybe
you're trying to get home and on a rainy day.
Right,
and there's
summer, and water in the subway station. Do you guys have, at least as part of the upcoming capital plan, a plan in place to update the infrastructure?
A couple of points on that, right? A couple of the issues that arise in the subway systems are not the MTA's fault. New York City, right, contributes to the flooding issues that we face in the subways, whether it's through DEP, manholes, the sewage. So that is one aspect of the flooding that you see on the New York City transit. But our historic capital plan, that $68.4 billion, does have climate resiliency of hardening the system in certain stations proposed in there for it.
Let's talk a little bit about congestion pricing. Not as hot of a topic as it was a few months ago. It seems like it's died down a little bit. In your view, is it working?
Congestion pricing is working. It is reducing traffic by 11%. What does that mean? 70,000 cars are off the road every single day. What else is it doing? It's moving our buses faster. It's moving people faster. We've seen a change in ridership, but also we've seen safety increases. There's a 14% decline in pedestrian crashes. And on top of it all, it is bringing in the revenue that we had projected originally.
It's being watched very closely, not just by proponents and opponents of it, but also by other cities that might want to put this into practice. Have you or has the MTA heard from other cities about congestion pricing, about the model, and about questions about implementing it in their own cities?
The MTA has heard from other cities and transit properties and engaged with them to have conversations about the process that New York implemented for the successful congestion pricing program that we're having. So they're looking at us as a model.
We have to ask about the Second Avenue subway expansion as well. Just walk us through some of the plans for and the timeline here, because this has been something that's been in the works, something that any New Yorker who's lived in New York for the last
how many years? 40
decades, 50 years.
50. I think we talked about that at our special board meeting on Monday. The contract that our board just approved is almost a $1.9 billion contract to start boring, right? What does that mean? It's starting the tunneling for the 3 stations that are vital to Second Avenue Subway Phase 2. And we are committed to expanding Second Avenue Phase 2 here at the MTA. And we think it's going to be a great service to our customers. It's going to serve about 100,000 customers, in addition to the 200,000 customers that Second Avenue Subway Phase 1 serves today.
Do you have a timeline or an expected timeline?
I think the 2032 was the service date that we have set publicly.
It's a very, like I said at the beginning, it's an unenviable task that you have ahead of you. Some people would argue. I would imagine that you spend quite a bit of time studying other transit systems around the world, what's worked and what hasn't worked. If you could wave a magic wand here in New York City to overcome some of the barriers that the MTA has experienced, whether they're financial barriers, whether they're CapEx barriers, what would those be? Like, what is the biggest obstacle to making the service even better here?
So I think, Tim, one thing that I would say is MTA is a leader, and being the largest agency in North America, other agencies look to us. I think I said this before, we led with the fiscal cliff. We lead with our capital program as well. We have started to do things differently since Jano Lieber took over for C&D and now Jamie Torres Springer. We do design build, we do faster, cheaper, and better. But we're employing definitely different ways of doing capital programs as well as operating for us to be better.
I want to go back to congestion pricing and some financial questions around that, specifically about selling debt off of revenues. Do you have plans to sell debt off of revenues from congestion pricing?
So as you know, the congestion revenue is dedicated to the 20 to 24 capital program. It is expected to generate $15 billion for that program. And once we see a stable market in the revenues coming in, we do plan to issue debt. We've talked about it. That's not sometime until 2026 for us. Once we see a comfortable stream of revenue, we've projected $500 million for the next 3 years. And we want to make sure that we see that revenue and the markets are comfortable issuing that debt for us.
You've talked about fare increases on MTA services. What about increases in congestion pricing, and what is the timeline for that?
So as the governor has said to us, right, it's the toll will continue to be $9 for 3 years. Then it'll increase gradually to the next 3 years at $12, and then in the seventh year, it'll be a $15 toll. So we've already have that phased in based on the schedule we approved.
Can you just bring us? I know there's litigation around this with the federal government and with the state, but can you just take us into conversations that you've had with counterparts at the Department of Transportation over the last few months about making sure that the MTA stays on a sustainable financial path?
So I think, what I would say is the federal government contributes $2 billion to the MTA, and that's a revenue source that we rely on to keep the system in a state of good repair. And so we would continue to want that funding. MTA moves 40% of riders across North America, but receives only a fraction of federal dollars from Washington. And so we continue to rely on the federal dollars that we get, and it's important for us.
But what's the backup plan if that evaporates?
We're confident, right, that the MTA and the federal government, the federal judge that is assigned, right, we're confident that we would win that lawsuit. Judge Lyman issued a positive finding for the MTA just a few months ago, and congestion pricing is, continuing to operate, and we're generating the funding.
Jen, thanks so much. Oh, go ahead.
Well, I was just going to ask one more question. I imagine, you get a lot of people who hear these numbers. Congestion pricing is on track to raise $500 million. They say, wow, that sounds like a lot of money. Why are the subways still the way that they are? Delays, crime, uncleanliness. Help us just understand. I know that you said that a lot of those fares go towards paying workers, but a number like this, a number like $500 million, what does it mean in the context for the broader MTA organization? Is that a lot of money?
So I'll give you context. Our operating budget every year is about $20 billion, right? That is to run subways, buses, commuter rails, and the services for 6 million commuters every day. But in order for us to keep that system running, you have to maintain it, right? And so $68.4 billion, a good majority of that funding is to keep it in a state of good repair. That means new rail cars, new buses, new signal upgrades, track maintenance, and everything else that goes with operating a system that's so vast in size. So $500 million is just one stream of revenue that generates, when we leverage it, $15 billion to continue with the capital side of the world, but the operating side has different funding sources. But we're confident that we move 6 million customers every single day, and we're happy to do that safely.
Jay Patel, CFO of the Metropolitan Transit Authority, joining us here in the Bloomberg Businessweek studio. Let's get an update on how the markets are looking. Some business news also. Charlie Pellet is standing by. Hey there, Charlie.
Thank you very much. We are on track for a lower close. The Dow, the S&P, NASDAQ, all declining right now. A slide in the world's largest tech companies weighing on stocks. The S&P right now down 44, just about the worst level of the day. A drop right now of 0.7%. Dow Industrials down 82, decline there of 0.2%. The NASDAQ Composite Index down 309, a decline of 1.4%. Our Mag 7 Index trading lower by 1.6%. The 10-year 4.29%. The 2-year 3.75%. Gold right now is down 0.4%. Spot gold currently at $33.18 the ounce, while West Texas Intermediate crude oil down 1.6%, $62.43 for a barrel of WTI. Bitcoin at $113,008 right now. Briefly, Viking Therapeutic shares are plunging after its experimental obesity pill disappointed in a mid-stage study. Shares of Viking, they are now down by 41.8%. Recapping stocks lower, S&P down 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Let's talk nuclear, because shares of NANO Nuclear Energy, it's a $1.2 billion market cap nuclear energy company. It's focused on, in part, developing the next generation of nuclear reactors. Those shares down about 7.5% today, down for a second day in a row. This after the investment bank Ladenburg Thalmann cut its recommendation to sell from buy. It wasn't just any cut. Michael Legg, over on the team there, cut his price target on the stock from $51 to $9, saying NANO's focus on ancillary ventures in fuel, transportation, and consulting are distractions from its core initiatives, like its Kronos reactor. We're joined by James Walker, CEO of NANO Nuclear Energy. He joins us from Vancouver. James, typically I wouldn't start an interview with an executive about an analyst call, but this one's such a big cut from $51 to $9, and it's hit the stock pretty hard. Shares down about 17% in the last 2 days. What's your response to this? Because the criticism, it's pretty pointed.
Well, this one's a funny one, because obviously this price target came out at the same time as a bunch of others that were at 50 and 40 and normal kind of prices. And even Michael Legg 5 weeks ago put out a price target of $51. So, and we've not spoken to him since. So it's an odd one, because we know Michael Legg did interview with us for a job, and he did want to be involved in the previous financing, and maybe it's the fact that he wasn't able to be involved in those two things he might have been upset about. It's very difficult to say. Okay, well,
we don't have a response from Michael at this point, but we'll have to reach out to him to get that response.
That's okay. And also, I'm only speculating, because we've not spoken to Michael since his $51 price target. Okay,
let's move on a little bit from this one. I want to, and look, Emily, as Emily pointed out to me before our interview, the stock is up more than 350% since going public last year. So, zoom out a little bit. Talk a little bit about the technology that you have with the Kronos nuclear reactor, and what makes you so confident this version of next-gen nuclear tech is ready for prime time.
So our reactor is a high-temperature gas reactor that utilizes TRISO fuel, and that's very important for two reasons. It's very well-known tech, very high TRL levels, long history of operation. TRISO fuel obviously been designed to be inherently safe system that avoids things like conventional reactor meltdowns, which might be possible with larger systems. But we've also designed the reactor so it is as large as you can possibly make a reactor, so you can keep it completely modular. And that means you can keep manufacturing these things along a production line, and then you get economies of scale very quickly. I think we're very confident of our commercial strategy here, with being able to target markets continuously and be able to roll these things out. So on that front, obviously we're very happy. The larger market, obviously huge interest from the tech industry, but in the industry in general, quite widely, is that there's a big demand on these systems at the moment, and we're obviously positioning ourselves to be one of the forefront leaders in delivering this next generation of nuclear energy to the market.
Let's talk about the tech industry and the demand that you're seeing there. Do you line up customers already, or is it more just about focusing on developing this Kronos out like before you actually start meeting with tech companies?
Like we're in discussions with many potential customers already. So it's AI centers, it's data centers. I mean, their energy demands alone are huge. But for instance, we've got a massive project in Canada that we're working on at the moment with the government. And in even that project, they're looking at sort of several hundred communities in the north that subsist off diesel. So it's not just industry. Governments are looking for solutions to provide power to remote locations that might be off grid. I mean, that's an enormous potential market. So obviously we're going after that too.
James, a lot of what we're talking about is potential. And when it comes to this technology, we're used to talking to folks who are in the early stages of development of, for example, small modular reactors, SMRs. And one thing that is notable with everybody we talk to with next gen nuclear is that at this point, the tech isn't there yet. We haven't seen one of these with regulatory approval out in the wild actually working. What would you say to somebody who says it's another company that has yet to achieve any notable milestones?
So what I would say is that there's basically, I wouldn't say no risk, but very low risk about any of these reactor companies not succeeding, or at least several not succeeding to produce licensed reactors that'll be very capable of supplying power. What I would say is that there are larger considerations around the industry. So for instance, the fuel supply chain in the US does need to be built back to a level where it can mass manufacture fuel to enable the mass manufacture of reactor systems. And so this could be one impediment to these things being rolled out en masse, is that you do need to get that in place first. And so you have already seen advanced reactor systems that have been licensed by the NRC, and there's a number of them undergoing licensing at the moment, which will mean ourselves and a few others will, at the end of this decade, there'll be licensed systems, but you still might need to wait for that fuel supply chain to be built back. And that means enrichment, conversion, even domestic uranium mining. That's all underway, and the DOE is putting a lot of money into that. So it seems inevitable because it has that massive government backing, but it all needs to happen at once. And so big infrastructure challenges. There's big funding that's going into this now, but timelines obviously push this a little bit farther out.
How would you describe the current tone that regulators have when it comes to nuclear energy? Has it changed at all in the last few years?
So the poor regulator, there's been an enormous amount of pressure put on them, firstly by the Biden administration, then the Trump administration. And that's come from heavy lobbying by industry, heavy pressure from the DOD to have a national capability to be able to mass manufacture the fuel for submarines and aircraft carriers. And that's fallen onto the NRC to look at reforming new regulations so they can enable the mass rollout of new systems and reduce licensing times. So they've obviously tried to incorporate as many recommendations as they can, and they are looking to reform to enable themselves as an organization to deal with this sort of nuclear renaissance. So credit to them. Their principal responsibility is still safety. So I think some of their evaluations won't change substantially, but new Part 52, Subpart F, things like that are going to enable the mass rollout of reactor systems. Those are important. Those will be very different from the past. That will, say, for instance, our reactor allow us to mass manufacture reactors, and they are licensed at factory level. And then we can deploy them to sites across North America, and then they don't need further licensing at that point. That is a very unique reformation that the NRC is making for companies like us.
Hey, James, you're developing nuclear reactor products that include the Kronos, the Zeus, the Odin, and the Loki. Why develop 4 different products and not focus on one?
So we are definitely focusing on one. That is the most important thing, is that almost all our resources are going into the Kronos reactor, highest TRL level, most commercial viability. What I would say about the other reactor designs is that there's no overlap in market. Kronos is targeting big power, like several hundred megawatts, gigawatts of power. Some of the smaller reactors, 1 megawatt systems, they would be looking at much more remote locations, mining projects, oil and gas sites, military bases, things like that, which Kronos might not be suitable for. And then, for instance, we might go even smaller, and we're in talks with, say, the Army and the US Marine Corps about a much more deployable reactor system that could potentially work alongside their forward operating lines. Something like that, you would then have 3 reactors being developed that have no overlap. But overwhelmingly, Kronos is where all of our resources are going to, and most of our personnel are being invested into.
Our understanding is that the U.S. Nuclear Regulatory Commission grants licenses for certain activities when it comes to nuclear energy. For the Kronos system, what's the pathway here for getting some of those NRC licenses? Are you close?
It's a good question. So we have the advantage of seeing in recent years what has worked and what hasn't worked. So we know with the NRC, there's a bit they have an ability to license a bit easier if they're familiar with the tech. We thankfully have a very familiar tech to them, high temperature gas reactor with a fuel, TRISO fuel, where billions of DOE money has already gone into that to make sure it's certified and safe and licensed fuel. But what we're going to do is we've got 2 massive projects, one at University of Illinois, UIUC, and one in Canada that we'll be building at Chalk River. And that's to build out 2 full-scale reactor systems that we can demonstrate to the market that work, that we can sell power from, but also that we will license concurrently so that as soon as they're completed, we will be able to commercially roll out. We have seen that companies that have opted to design a reactor and get it licensed as a paper reactor have struggled to sell that reactor because being the customer, you don't want to be the first one to go and go and purchase the license for a reactor and be the first one to construct it. So we're going to demonstrate it, get it licensed, show it works. Okay. And then there'll be a lot of lessons learned in there that we can use to commercially mass produce these reactor systems.
Is this months, years? Can you give us a date when there will be something real that will be deliverable and able to power something?
Well, it's happening now. So at UIUC, we're just about to start geotechnical drilling on the site where we'll be constructing this reactor system. We'll be putting in for a construction permit as soon as we get the results back. As soon as we get that construction permit approved from the NRC, we'll start on construction. So these are all things that are happening right now. And that reactor will be licensed towards the end of this decade. While that's being done, we'll build out the core manufacturing facilities. So as soon as that reactor's ready, then it's licensed, we can hit the ground running and start producing. And look, NANO is a very unique company in the sense that we've taken a holistic approach of what's necessary to make a reactor succeed. And that includes examining everything, reactor vessels, nuclear graphite, fuel. And so we've even invested into enrichment companies to ensure that we have solutions for where we're going to get our fuel from, and we'll build those out over the next few years. So we will be a vertically integrated company, and it's partly out of necessity. We want to de-risk ourselves to ensure we can pull this off successfully, because ultimately there's some very high barriers to entry for success here. You've got to have the capital, we've got that. We've got to have the personnel, we've got that too. We've got to have the right tech, and we've got that. But ultimately, we've got to have a route to get the fuel and the components necessary. So the strategy is far encompassing, but it's necessary to ensure that we're successful.
James, thanks for joining us. James Walker, CEO of NANO Nuclear Energy, joining us from Vancouver. I'm Tim Stenovec, along with Emily Graffeo. Let's take a look at some stocks that are on the move. We are joined by Bloomberg News equities reporter Norah Mulinda. Norah, what's on your radar today?
Well, we look at the market that's pointing lower, but there are a couple names that are popping into the green. One of those being Intel. So shares of Intel, ticker INTC, they're charging higher, earlier up as much as 12%, but now pairing to about a 7% gain. And this is after the Commerce Secretary Howard Lutnick said that Trump believes that the federal government should get a non-voting stake in the company. And they're actually citing this in exchange for the money commitment that happened during the Biden administration here. So it seems to be getting a bit of a pop right now. We're seeing a lift. And of course, we know there's been a lot of news that's been coming in recent days, especially with SoftBank, just yesterday, making that surprise $2 billion bet on its AI revival. So it seems to be a bit of a positive day here for the company.
Yeah, Intel has really lifted itself up. I mean, it's right. Up 28% this month, adding $25 billion in market value.
Right,
just in the
up
last
26% year to date.
A far cry from what we heard not last week, but the week before, when the president actually called for the ouster of the company's CEO, Zelenskiy-Putin. He did that on social media. And then the CEO went to the White House. Then we got all this reporting from Bloomberg about a potential U.S. stake. So it's really interesting stuff.
Definitely a turn in story here, it seems, at least for the moment. I'm also looking at shares of Viking Therapeutics. Definitely a different story here. It is deep in the red today, down as much as 45%. That's its worst day since 2016. Not a good look right now. And of course, this is after it had this an experimental obesity pill that disappointed. It was a mid-stage study here. And 28% of the patients that were in this study dropped out in just the first 3 months here. So we are really seeing this as one of those cases where people are really comparing it to the likes of Novo Nordisk and Eli Lilly. And of course, we see all these different companies really racing to get these obesity pills out there and on the market. And it seems that clearly this disappointed here for us to be seeing such a deep plunge in trading today.
Viking Therapeutics, ticker VKTX.
Yeah, worst stock drop in 9 years.
Wow, yeah.
And Bloomberg's Carmen Reinecke writes about the short sellers on this stock, at least reaping $514 million just right now, a one-day paper profit, if that actually, if the losses hold, which is a lot of money.
Yeah, down 40% year to date. So lots of red that we're seeing on the screen right now as it relates to this stock. I want to end with the name in the green, looking at shares of Home Depot. That's ticker HD here. And of course, we know this to be a home improvement retailer, but essentially what people are focusing on right now is its comparable sales. So it reported comparable sales that were up 1% this past quarter, but that's in comparison to the 3.3% decline that we saw in comparable sales a year ago. So this is a bit of a positive swing here for the company. We're seeing Wall Street really celebrating this here. They're saying that shoppers are really invested in smaller projects, apparently gardening, lighting, and that's really been a tailwind here for the company. Looking at shares that are about 5% higher, as much as 5% higher in trading today, now trading about 3%.
I found the CFO's comments to Bloomberg really interesting. Richard McPhail said, quote, "Our customers are telling us they're putting projects on hold. They are not canceling them." Mm-hmm. And they're doing smaller projects too.
Yeah, I mean, it seems like people are doing the whole fixer-upper moment. So it is a lot of these smaller projects that we're seeing done here. People like the gardens, apparently.
It's a seasonal business. It's seasonal, right?
None of that is easy in the Stenovec home. I will just say that. All due to my ineptitude when it comes to home improvement. Norah Mulinda, she is from the Bloomberg News Equities team. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. It is Bloomberg Businessweek Daily. A big thank you to Emily Graffeo for filling in for Carol Masser. If you are staying on TV, the close is up next. If you're joining us on Bloomberg Businessweek Daily on YouTube, Bloomberg Originals, or Bloomberg Radio, we got a great program. The CFO of Block, the company formerly known as Square, joins us in just a few minutes. That's next on Bloomberg Businessweek Daily.